everybody.
Sean and Kelly here, Price and Price Group.
Samson Property.
Thank you.
That's right. Tyson's Corner, Virginia. Here
That's
we are
right,
at
that's
our
right.
beautiful Samson office. And today we're going to talk about the
Market
Mortgage
snapshot.
Minute later with Tatiana.
Yes.
But for now,
The
it's
market snapshot.
the market snapshot.
All right, so
That's what I was saying.
that's beautiful. Okay, so what happened in the last 7 days in the Northern Virginia real estate market in under 5 minutes?
According to my emotions is what we're going to start with, right?
Okay,
my
that's right.
feelings on the market were that we had a lot more homes coming on the market, so a lot more sellers listing,
Mm-hmm.
and that we had fewer houses going under contract,
Mm-hmm.
that the buyer activity has kind of waned a little bit. It feels like that seller's market has kind of tempered its enthusiasm a little bit more for the second week running.
Yeah. Okay.
That's what it feels like.
So that's a very, very good point, because it does feel like that. I would agree based on feeling.
We only got one house under contract last week.
Yeah, and they got that property under contract at a below sales price.
Yeah.
They got all their contingencies, so it feels like that's what's
And
happening.
it was after the list price had even gone down a little bit, which it
well,
really needed to. It was over.
Yeah,
it was overpriced,
which
but-
is what we always say.
but
The price
still,
is
I
appropriate.
mean,
Yeah.
So that's why.
So
it
that's what
feels
it
this
feels
way.
like. So that's why we do numbers, because that is not the case. So let's dive
You
into
mean
the
my
numbers.
feelings aren't always accurate? I don't think
Sometimes
that's
they're a little
true.
bit off.
Let's take a look.
All right. So as always, the orange line is what?
It's the buyer activity. Those are the houses that went under contract.
And what's the blue line?
The blue line is the seller activity, the houses that came onto the market.
Yes, new to market. And the reason we do this, and the reason we look at those specific statistics, is to give us real-time statistics, so we know what we're doing and can make real-time
Can you
decisions.
say statistics again?
I can say it 3 times. Okay, so we had a spike in buyer activity, and Kelly, we have seen over the last several weeks that buyer activity has been continually dropping, and this last weekend it just popped. We had a bunch of showings that came on. We saw a lot of increase in that buyer activity, but there were still some properties that were sitting on the market. So that's why I kind of felt that way, like we were talking about feeling wise.
It didn't feel like a mad rush.
Yeah. If you look at inventory also spiked. So the orange line is the buyer activity spike. The inventory line spiked as well, but it did not spike as much as the blue line. So it did actually strengthen our seller's market just a little bit. Now, let's take a second here to explain the difference between seller's market and market activity. So if you look at the market activity, this is where we are this year. This is where we were last year at this time. So our market activity is actually stronger than it was last year. So the market is not slowing down. The market's actually busier than it was last year.
Keep in mind, and I have to point this out because that's not what they're talking about on nationwide news. Keep in mind, this is the Northern Virginia area, the DMV, which is DC, Virginia, and Maryland. DC, Maryland, and Virginia, not the Department of Motor Vehicles.
So that's the market activity. Market activity is up from last year, but if you look at the seller market strength, it's because there's more inventory. We actually have a little bit more of an even market. So it's a good opportunity for buyers.
It feels good.
It feels good. We've been saying this for a period of about 6 weeks now. This could change at any moment. This market did this last year, and it caught up into a seller's market, and then it stabilized, but we don't know where that seller's market is going to stabilize for this year. So what this means for buyers is really get out there and look right now. There's inventory out there. There's still multiple offers on properties, but there are some that are there for opportunities.
Also, while there are multiple offers, right? Now, what like the one that we just got under contract, yesterday, it had a home inspection contingency on it, which is kind of unheard of. And even if you can't get that, sellers now are more willing to allow pre-offer inspections, which when it was super, super hot, there really wasn't time for that. They weren't allowing it. But now you can get that. We would never advise you to not get an inspection. I mean, sometimes I could go on a long hour about this topic, so I won't do that.
But so she's right. We're getting the contingencies in there. And the opportunity for those pre-offer inspections. So there are ways to navigate this market favorably for buyers. Prices are not coming down, so don't let this mislead you in that way at all. It is just an opportunity for buyers to go into the market in a more fair situation. So buyers come in now. Sellers, it is still a seller's market, but you can't just throw anything on the market in any condition with a high price and expect it to sell. Buyers
And you
have some
can't go
options.
into it not expecting to
Pay a better
pay the buyer commissions, because if you do, keep in mind they're going to offer less money for your house, right? Because if they have to pay the commission, then it's going to come out it's going to come out, right? So you got to start thinking about the net and not really the house price and nickel and dime.
Yeah, we are entering into a net market.
Yeah.
So most
expect to hear that a lot more.
Yep. Okay. If you have any questions, please feel free to reach out to us, and we will see you on next week's
Our phone
video.
number is 703-424-5873.
That's my phone number. What are you doing?
Calling for a hot date.
That's right. No. I'm married.
I love that.
All right, we'll see you guys next week.
Bye.
All right, everybody, it's time for our Mortgage Minute with Tatiana, I believe, Lopez from Prosperity Home Mortgage. Hello, my friend.
Hello.
Good
Are
news.
you surviving in this heat? It's getting better.
It's better, yeah.
Yeah, it is. It is. Yeah. Yep. Staying in the air conditioning, blinds closed. Yeah.
Yeah, we'll make it.
Tomorrow is gonna be
We'll
beautiful.
make it. Yeah, do you have plans?
Just hanging out with friends.
Yeah.
Working,
I'm sure we'll
working.
end up sending you something to make you work. So.
Oh, yeah. I
Please
want to know
do.
if you have plans, because the bigger your plans are, the more business we are gonna have. I'm like, okay, this is gonna be a busy work weekend.
That's perfect.
Yeah.
It
So
works.
be ready next week, because we're going out of town for 4 days. So we expect it to just kind of course, as always, everybody comes out of the woodworks at that point. So
Well, whenever I go somewhere, I have my laptop with me, so I'm always
Yep.
ready.
there you go. There you go.
Very good.
Well, what's the word? Good news, bad news? What's up?
Pretty good news, actually.
Okay.
Just like with the weather. So last week, the week of July 12th to 18th, the rate decreased to their lowest level since mid-March.
Wow.
Nice.
So the latest inflation readings will likely help convince the Feds that inflation is returning to their 2% target. So, and should inflation remain low through the summer, most economists expect that the Fed will begin cutting the rates in September. So now everybody is saying, that they 100% sure that's gonna happen. So we'll see what happens. And for July 31st predictions, none of gurus think that rates will increase. 95% will think that the rate will remain the same, and 4.7% predict the decrease in interest rate. And we're talking about the interest rate that Fed, the prime rate. Yep.
Wow. Okay. I mean, what is your feeling tell you about them announcing a rate drop in July versus July and September? Do you really think they'll do it sooner than September?
I don't think so, but September would make more sense, especially with the elections
Yes.
Yeah.
coming up. It's gonna be interesting to see what's gonna happen with elections around the corner and all this development with what's going on with politics right now.
Yeah.
But who knows? It actually could, really help the rates. Temporary. It typically it's temporary relief.
Yeah.
But if rates go down, and we remember that prime rate is not the same as mortgage rate, right? But
Yeah.
it doesn't have it does have effect on interest rates, though, like in the short term. So if rate goes down and you in the position of locking the rate in, I recommend locking it and not expecting something better, because something better is enemy of good, right? So
Yeah. That's right.
That's my 2 words of wisdom.
I love that.
Yeah. Something better is the enemy of good. I like that.
I'm gonna say that when you're walking out looking like a snack, and I'm gonna say, don't forget something better is the enemy of good enough right here, honey.
So so wrong.
We use it all the time.
That's right. Never forget that. All right. Okay. Do you have any questions about the rates, or?
Don't.
Yeah.
I don't. I love everything you said.
Yeah. I wish you had your nice hat on right now.
Yeah.
Okay. Question for you.
Mm.
What is the benefit, or on the other side, the risk of working with a local lender versus working with a national lender.
Yeah.
And when I say lender, like the actual loan officer. Yeah, so let's go with that today.
Well, so I think for the benefit, there are always benefits working with local lender more than with someone who is not local, right?
Right.
First of all, they might not understand the market well, because market is different state by state. Even could be, if it's a big state, it could be a little bit different on the northern part and south part,
Yeah.
right?
Yeah. Yeah.
But you know, local lender will know the dynamics. They will know, and they care because they're here in our backyard, so we care about the relationship. Versus when someone is working at the calling center, they don't have relationship, they don't really care. They might not know that we need to close the day we have the contract, right? So
Yeah.
they
Yeah.
might be more relaxed at that. You might not be able to talk to the same person. If it's a 800 number, right? Or even if you talk to the same person at first, and then when it goes to underwriting, then you're gonna talk to processor, then you're gonna talk to
Yeah.
someone else. So it's always gonna be someone else. The big thing, especially with credit unions, I'm not trying to bash any of them, but they're from 9 to 5 and Monday through Friday. So
Right.
when are we writing contracts? At night,
After hours.
after hours
Yeah.
and on weekends. That's what happens. True story. Last Saturday, I had guests over and I got phone call at 9:30 at night that they were writing contract and they needed to submit it by 10 o'clock in the morning.
Yeah.
And I didn't know the people. I didn't know the clients. So I told them, do the applications, send me these documents,
Mhm.
and I will get you that letter by 10 o'clock in the morning. So I did have people over, so I couldn't really work on it right then. And thank God they needed it
In the
next morning. But if they needed
Yeah.
it that night, I would, let my husband deal with them and I would work.
Our
But I
friends
actually
and family are all used to it, right?
yes, but I sent them that pre-approval at 4:30 in the morning, and unfortunately they didn't get that contract. But it's just that's how we work, right?
Yeah.
Right.
Yeah.
Comparing to someone who is from 9 to 5, and
Yeah.
what else we have? Also, the overlays is a big thing, and overlay is what big banks typically have. They're more restrictive guidelines
Mhm.
comparing to actual guidelines of the Fannie Mae, Freddie Mac, for example, or FHA, VA. So they're gonna put their additional restrictions, and that could create a problem with qualifying, and someone might not be able to qualify because of those overlays. And big guys, they always more restrictive and they have more overlays.
Yeah.
Right.
So I think that's it.
Yeah.
Yeah, and I that's such a big deal in a market like ours, where I mean, if it's a buyer's market, it's super slow. It doesn't matter as much as it does now in our market when we have to get the best of everything on our offers immediately after hours on weekends, and the best, a big part of that is the loan qualification, right? I mean, that's absolutely huge. And a lot of times when we have offer deadlines, if we submit an offer that is like this nationwide lender and we can't get them on the phone to get a property specific pre-approval,
Or a conversation with the seller's agent, or
the sellers don't even want to factor that offer in when they have all these other offers with lenders they can get on the phone and confirm everything. So it's huge.
Yeah. And we had an example of, and this is what provoked the question. Provoked, evoked, caused, all of those provoked.
Yeah.
Okay.
All of them up.
We had a client that was from New York, and it was with a large bank, and their lender was from New York as well.
They wanted
And
to
stick with them.
They wanted to stick with him, so it's fine. The lender was licensed in Northern Virginia as well, or Virginia. And when it came down to it, we were 3 days out from closing and we weren't getting the closing disclosure. And we were checking in with them regularly. Hey, what's going on? How are things? Yeah,
Well-qualified buyers.
perfect, yeah.
That wasn't an issue.
No issue with the buyer whatsoever. All of the updates were, yes, everything is running on track. Kelly would ask them specific questions. Everything's great. We got to that 3-day disclosure point where we had to have that CD signed and they were nowhere near ready for it. And they're like, well, and basically to them that rule of the settlement date was a suggestion, as you always say. It was a suggestion. They're like, yeah, it doesn't matter. We'll just push it back for the settlement date. And we're like, no, that doesn't work.
No, you're in breach of contract.
Yeah. So we had to, like, that day we were on the phone with 3 levels of supervisors to get somebody that would just get us this closing disclosure to get it signed in time so they could close on time. Because the seller on the other side of this transaction was not a kind seller.
They were happy to take the EMD and put it back on the market because they had plenty of backup offers waiting in the wings.
Yeah, so this is one of those scenarios where it's like that deadline, those deadlines matter. We had another issue with a big bank
and that
where
was a good lender. I mean, they were good. They just don't know when they're not their local.
And it was the loan officer specific, being from New York. We had another big bank issue with another loan officer from out of the area that they could not approve the buyer and would not get us a denial letter in time for the contingency.
Right.
So they missed the finance contingency without the denial letter and it moved forward because we had an automatic expire on that one. Luckily, that was when Kelly was getting into lending and she was able to pull that one out and save it. But we had 2 examples where the lender just didn't care about deadlines. They didn't understand.
It was almost like once the loan officer knew, oh, my company can't do it, they didn't even want to take a call so that we could be like, we need the denial letter.
Yeah, and they didn't care. They didn't care about the business reputation because they didn't work in this area.
Yeah.
So to me, that's where it gets really, really important.
Yeah.
And it's that protection of that EMD that's huge.
And plus you're here.
Yeah, plus that.
No, I absolutely agree that those are great examples. I remember one where I saved the deal where also the bank, it was a condominium and the buyer, they needed to get the condo questionnaire, open some can of worms. But if condominium is, let's say it's a conventional financing and condo complex is on a Fannie Mae approved list. Us, for example, we don't need the questionnaire because it's already an approved list, but not all banks are like that. So some are still required that. So we did open that can of worm for them, but they came to me. I said, well, we don't really need the questionnaire because it's already on approved list. So we were able to do the deal.
Right.
Yeah. And so it's just those nuances that are really important.
And that I can say when I had my license, it was with a nationwide company and I still worked here in the area. I was licensed in the area, but because of that kind of thing, all those extra overlays we had, it would hold things up that when we worked with you, I'm like, Tatiana doesn't have to do this. Even our appraisers, it's like it went to this pool of so many appraisers that would take them so long to get out here. Some of the appraisals were kind of whacked. And I'm thinking, Tatiana's appraisals aren't like this.
That's another thing, if you work with, we have our local appraisal, we have our appraisal review department. So it makes a big difference. And we have a lot of appraisers also, but each area has its own pool of appraisals. So we're not going to send someone from Silver Spring to appraise house in Ashburn, it's gonna be local appraiser. And if there is an issue with appraisal, it doesn't go to a third-party company that is the turnaround time is gonna be very long and they don't really care because we have the department that will review it and deal with the issue and save a lot of deals this way.
Yeah.
That's true. And then the last point that is really special to me is the agent to loan officer relations, right? Because we've been able to call you, we were here local with each other, and we've got such a great working relationship that we've been able to call you about situations that you won't even be helping with, but you help us and you help our clients. And you've saved one or two things for us just because we have this local professional relationship. And I think that is also something that's very important.
That's right.
Yeah, and sometimes, it's important, like, let's say they work with this lender and there's 3 days from the settlement, I could say, let me take over and,
Yeah.
maybe we'll have to postpone settlement, but that's gonna be a last resort for them, of
Yeah.
course.
Yeah.
The
Yeah.
first thing is just to get this deal through on time.
Yeah.
And sometimes you need another set of eyes or brain to, come up with a solution, definitely.
And I can tell you, our buyers have said, okay, we're using her for our next deal.
That's right. That's right.
Yeah.
Okay.
That's it. You have anything else?
How do they reach out to you?
Yes.
Oh, yeah. Call me at 571-245-3000.
That's right.
All right.
Call,
Awesome.
text, all hours, whether she's hosting or not.
Especially